Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. I'm very excited to introduce our guest today, Jason Myers, the lead architect of Audit Chain, the company that's developed the protocol Pacioli AI, which we'll be discussing in detail today. I'm very excited to have you on as a guest, Jason. How are you doing today?
Great, Patrick. Thanks for having me.
Absolutely. Well, thanks again for coming on. To get started, can you briefly tell us about yourself, your company, and how you got into the world of crypto and Web3?
Sure. So Audit Chain Labs develops reporting and assurance products that make disclosure simple and easy, right? They're Web3 and AI based. I My background is in investment banking. I took Alexion Pharmaceuticals public, Metarex, VCA. My old boss is an investor in our company. I started on Wall Street in 1988. So that's my background. I had my own firm for a while. I managed stock plans for some of the largest companies in the world, one being Facebook before they went public. And I started Audit Chain as a result of a conflict I had with a regulator. After a request for proposal was transmitted by Facebook, and we kept the account, but there were seven other providers that wanted the business. It was the most coveted client on Wall Street and the largest private wealth opportunity in history, along with significant venture capital opportunities, right? Because the first 500 employees of Facebook are some of them are household names now, and that's how Audit Chain was inspired by those series of events. There were accounting issues that were the subject of that process. And at the end of the day, I gave up my license, I gave up my firm, and I gave up Facebook as a client. And this was, it ended in 2013. And I, at the time, started digging really deep into blockchain. In 14, Ethereum was preparing to launch. And I read the white paper. I read a lot of papers. And when I finally had my aha moment, I said to myself that, accounting, audit, and financial reporting are the best use cases for this, right? I mean, what is it? It's a ledger within a ledger, right? Not only is it a ledger within a ledger, but the ledger is held by thousands of computers. It convinced them to change the history of the ledger without more than 50% of the agreement from those computers, the holders of those ledgers, which was a very significant moment for me. So that's a little about my background and how I got into the space.
Absolutely. So then, can you tell us a little bit about the primary goal around Pacioli AI, and what was the path that led to Audit Chain creating this protocol?
So after I had my aha moment, I knew that there was no way that governments were going to let cypherpunks control money. And that sooner or later, we were going to see regulations that look, feel, and function in a similar way to regulations for traditional securities, traditional currencies, and commodities. And the one thing that I was, as a banker, I sat next to the accounting and audit profession my whole career, right? Um, and in 2009, machine readable financial disclosure was introduced at the SEC. Interestingly, it was introduced and specified by our head of policy and chief operating officer. But to specifically answer your question, sooner or later, there was going to be disclosure for crypto assets. Blockchain was not enough. There's no context. The transactions are anonymized. It doesn't fit within a GAAP or IFRS framework or a tax reporting framework, right? So Pacioli was created at first for the specific purpose of complying with MiCA. And when MiCA was introduced in 2020, I said, here it is. When I read it, it's a replica of the 33 and 34 Act in the United States, except that there's no Rule 144 holding period, right? So we created the MiCA model for disclosure in 3 days because we're engineered for the most complex financial reporting for the largest multinational publicly traded companies. So that's where Pacioli.ai is starting. But MiCA is a tip of the iceberg use case because there is mild financial reporting and mild climate impact disclosure in MiCA.
And yeah, and you're anticipating that there's going to be future regulatory requirements with even further disclosure. So can you maybe get into that a little bit? Like, what are some of the current use cases that you're seeing with Pacioli AI? And then what are some of the future use cases or requirements that you envision? And, where do you see this growing into?
So everybody knows, well, maybe they don't, but standards are around for a reason, right? Crypto disclosure specifications have converged with traditional asset disclosure specifications. And those technical specifications involve the use of what I call the language of regulators, right? Extensible business reporting language is the language of over 200 regulatory agencies across 60 jurisdictions and counting, right? It was invented by our product manager, who was its earliest contributor. And so a white paper is a machine-readable document using inline XBRL, which is a machine-readable and human-readable rendering of information, which is how financial statements are rendered all over the world. 20 million are filed every year around the world with regulators, right? It's a lot of financial statements. And the specifications allow the aggregation and extraction of data using standard tools in a way that helps regulators hold oversight and supervision in their jurisdiction. And it allows analysts and investors to aggregate data to create and contribute to maybe an investment thesis, right? So that's a big part of what we do. It's more complex than blockchain. The blockchain part of what we do is the easiest part. So it's the stack above it that's really difficult. So standards are really important.
The stack above it, what you're referring to, is all the standards that you're going to have to meet with this data that you're pulling from the blockchain. And what you're saying is getting the data, although it's half the battle, that's the easier part compared to now fitting this data in with the regulatory requirements of MiCA and any other regulatory bodies that you may be working with in the future, right?
Correct. But it goes further than that because there are known inconsistencies in machine readable reporting taxonomies, right? That really they're accepted. But we've proven that, look, investors rely on the information in reports created by models based on those taxonomies. So as you know, in accounting, accountants will say, well, if it's not material, it doesn't matter. Well, material is 5% either way as a general guideline. When you have inconsistencies in the infrastructure, then you're going to have inconsistencies in the reports created using that infrastructure. When you look at business and financial information as a way to measure economic activity, which it is, and you take into account that government agencies aggregate that data to publish economic statistics, which are used in part by central banks to set and attenuate monetary policy, and then you look at it from a cumulative effect of all the non-material inconsistencies over a period of time, you could be talking about trillions of dollars of delta, right? Sure. So it may be one
over the cumulative, though, even though they're under the materiality threshold, you're saying cumulative.
Cumulative, correct. So that may raise the question as to why the chancellor was on the brink of a second bailout for banks, right?
Yeah.
Which is a whole different conversation, because it wasn't the banks. They did what they were expected to do. They exploited holes in regulation to make profits. They got greedy, but there were 4 adults in the room that saw everything. They knew everything, and they didn't say anything. So now you and I pay for it. How do we pay for it? Monetary debasement, right?
Absolutely. Absolutely. So the fact that you're going to be able to use this protocol to basically machine read the reports and really streamline, putting the reports together, but also the audit process on their reports. Do you envision this impacting audit services and CPA firms, and potentially the pricing structure and the services that they provide to be automating portions of this, or is that not your focus?
No, well, look, it's a byproduct, right? Because look, when you look at any technology, take financial services itself. Back in the 90s, when the internet was launched, prices of commissions came down because you can get an execution out of a bubblegum machine now. Whereas in the 70s and 80s and early 90s, you had to have a broker. You picked up the telephone, you called them, and you had a relationship, and they charged, I went through it, right? The commissions were much higher. So the services became commoditized, right? And when you look at assurance, and you look at how assurance is structured, you look at the audit standards, the engagement standards, right? Audit lives within a series of boxes, right? I'm going to try to say this as quickly as possible. In the old days, during field audits, you had experts that would look at the body language of your controller or CFO, and he would ask a series of questions that were designed to provoke a physical response. And if those physical responses were present, they escalated to a statistical analysis. It wasn't just data, right?
Yeah.
And the more these regulations were instituted, like Sarbanes-Oxley, the more internal controls were designed and put within audit scope. It doesn't seem to have had an impact on audit quality, right? So what we designed was a specification. The specification, it's called Standard Business Report Model. We wrote it and submitted it to the Object Management Group, and it's a bi-directional, structure-agnostic interchange with logical constraints. When I say logical constraints, I mean standardized logical models like US GAAP, elements of US GAAP, IFRS, or any reporting scheme, whether it's financial or non-financial reporting. And what we see is the ability to use this standard during accounting, audit, and financial reporting processes, right? This has nothing to do with blockchain, right? Blockchain solves a couple of problems, but there are much, much bigger problems in accounting, audit, and financial reporting, as you know, and that's the integrity and reliability of the process of recordation to communication, right? Because accounting is about recording events and transactional information. Financial reporting is about communicating them.
Definitely.
So the integrity and reliability of the information when it comes into an account, captured at the edge, into the accounting system, out through a disclosure control architecture really needs to be addressed. Regulations are very loose around that stuff, except to say that you have to have internal controls. They should be sufficient for the size and complexity of your organization, but that's as prescriptive as you get, right? So we do see an impact as time goes by on what we do. We do see a demonstration of what reporting and audit might look, feel, and function like in the future, similar to the process by which the public witnessed the evolution of Bitcoin as being a harder, more sounder way for monetary policy to exist. Might be the same way we're trying to do for accounting and reporting information what Bitcoin did for the hardness and soundness of monetary policy.
Interesting. Yeah. Now, is the end user right now or in the future of Petrolia AI, is that going to be auditors and accountants? Is that generally who you're onboarding on to using this right now? Or is it, internally you're seeing companies use it themselves to prepare for audits? What's that look like on your end?
So MiCA is like the 33 and 34 Act. It placed the crypto exchange at the center of the gatekeeper structure, right? So Pacioli.ai allows you to collaborate on a white paper. It's really not a white paper. There's only 3 out of 9 sections is the white paper. The rest is a prospectus, right? Like an S1 or a 10K or a 10Q. And you invite your lawyer, you invite your accountant, you invite your exchange, you invite a custodian, or maybe a launch pad if you're initially selling the token, right? They're all designed to contribute each of their required disclosures to this instance document during a session to create a single machine readable white paper, right? So it is collaborative in nature. There are mild financial reporting requirements, which we see getting far more complex as time goes by, right? Because in the law, they refer to your existing financial statements, but you're importing an abbreviation or summary of your financial performance on the spot balance sheet, and then since registration, which would go back a maximum of 3 years, right? How are you going to get that data? The only way to get that data accurately and reliably is to create it in machine readable format and to be able to import it in machine readable format using logical models, right? And I can talk about this stuff, Patrick, but accountants are very skeptical. The only way I can talk about it is if I actually show it to you at the same time. That's the only proof, concrete evidence that you can see. Otherwise, it's all abstract for people.
Definitely. Yeah, I agree with that. Especially accountants, we have skepticism built into our, professional nature. So I know right now with this protocol, you're focused on MiCA, and that's probably like the lowest hanging fruit for you guys. Are there any other emerging regulations that are top of mind that you see that you guys are going to be able to come in and, help create a greater level of compliance outside of MiCA, or is that really just the main focus for this right now?
It's the initial launch, but VARA is very similar. VARA in Dubai is another digital asset framework. It requires machine readable white papers as well. But as I said, we were engineered for the largest, most complex machine-readable disclosure. So MiCA and VARA are easy for us.
Nice.
Right? And as other regulatory frameworks are either clarified, amended, or originated in other jurisdictions, there's one thing that's for sure, and that they're going to use the disclosure technical specifications that have been standardized around the world.
Yes. Yeah, that makes sense. They're going to have some form of standardization, like you're saying, and probably look to some of these regulatory bodies that were first movers, like MiCA, like VARA, like you're referencing, and develop frameworks based off of that.
That's right.
So it seems like you're going to be very well positioned to, as we start to see this get rolled out worldwide, you guys are going to be one of the first movers that have this sound protocol that can basically be reworked and fit into any sort of regulatory body.
It is. And again, I can talk about it. I'd love to show it to you right now, if that's possible.
If you wanted to briefly show it, yeah, you can feel free to.
So you and I are going to create our own regulatory framework first. Then we're going to create a product that reporting entities are going to use to create reports.
Okay.
Right?
Sure.
That's how deep we go.
Okay.
And if I can figure out a way to share my screen here, I'll. Okay, here it is.
You should be able to, yeah.
Yeah. So can you see that?
One sec. Now we can, yeah.
You can. Okay. So let's glide right through this. I am going to create a framework for the year 2024. We're going to start from scratch, right?
Yeah.
Framework. This is a blank canvas. We just we bought a piece of land from England, from the UK, because they're shrinking every day, as you know. And we're going to start our own sovereign nation. And what we want to do is focus on a capital center. And we're going to create a regulatory framework where companies can come and use, go public, and create a disclosure framework. So let's import a base taxonomy, right? You and I believe that every asset's going to be digital. So let's take part of the MiCA framework, because it already exists, right? And we'll include the MiCA framework. So now we have a complete narrative disclosure for utility tokens, asset reference tokens, and e-money tokens, stable coins, right? But let's import more, because we don't just want a narrative. We want elements of a financial statement structure. So we're going to include, at a bare minimum, balance sheet, income statement, a cash flow statement, and a changes in equity statement, right? Common elements in most financial reporting schemes. We're going to include that in our model. Now, we do want to set an example for the rest of the world. So we're going to include machine readable ESG reporting as well, right? So we're going to go to this base taxonomy containing a lot of these elements. We'll choose general information, which is a template to use for that purpose. And since we're financial in nature, I'm going to choose, our Senate has charged us with creating the model. So you and I, who are panel members on that committee, are going to choose that. And so we're going to use software and IT because we're highly technical in nature. And we'll include that in our model, right?
Okay. Yeah.
But now you give it a second because there's a lot of computation.
Okay.
This might look simple. There's an enormous amount of computation.
Oh, yeah, definitely.
Right? So now we have a complete model, right? So now all you have to do for a reporting entity is map your accounting and other related systems to the model so that you can import all of the data and populate your model with a financial statement, right? And all this information. So what I'm going to do is, just in the interest of time, I'm going to show you the framework in a presentation layer that you understand and all accountants understand, all lawyers understand, all professionals understand. But it's not going to have any facts because we didn't enter the financial forms, right? But you and I just created our own regulatory framework that we are going to provide and prescribe to the business community to report in a standardized way so that we can use that information so that within a couple of clicks, Patrick, we can publish economic statistics that are reliable, that our central bank can use in order to set and attenuate monetary policy, right?
Wow, yeah.
So here's all your basic information for the crypto asset. The issuer of the crypto asset, you need a legal entity identifier, right? Here's your operator of a crypto asset. So each exchange is an operator. Here's the project, right? Name, description. Again, none of this is filled in, but here is your framework, your model, right? A description of the offering, the description of the asset itself, the rights and obligations that you have to the holders and purchasers, the underlying technology description, consensus mechanism, right? Your risk factors. If you're an asset reference token, you're going to enter similar information. The users of this model will choose whether or not they'll choose the elements of this framework that are applicable to them, right? This has to do with asset reference token information, and it's repeated for e-money token. And I want to get to the financial statements, which here they are, right? We just created a machine-readable model, a content management system that pops out any kind of disclosure model.
Interesting.
Right?
Very quickly, too.
Income, cash flow, changes in equity, right? Name of reporting entity information. And here comes your ESG reporting elements, which we only use 2, right? And again, there's no facts, so all you're seeing is the model itself.
Wow, yeah.
But that's it. You
and I just clicks, you're able to put that all together. Yeah.
5 minutes we did it. It's so easy. It's so easy. Even a DGen can do it.
Yeah. Right.
Right.
Yeah. It's very impressive. It's very impressive. So yeah, I appreciate that brief demo because it does sort of put into perspective. Hold on, with this a little bit here. 1 second. Sorry, our screens were getting messed up there. That does put into perspective just how quick and seamless that can be, and that drop-down menu allows you to tap down into basically any regulatory framework and then factor it into what you're going to be presenting in your final report. So that's extremely powerful.
one thing I do want to make clear. When the internet was introduced, there were people that built on top of it. One of the first things they thought was a good idea was a content management system, so that you can build a website without knowing HTML, CSS, JavaScript, or anything. You drag and drop, you type your content, you choose a theme, and that's it, right?
Yeah.
When financial reporting was introduced in machine readable form, they skipped that step.
Yeah. Yeah.
So now you're limited to about 1,000 experts in the world that know how to build those machine readable financial statements.
Huh.
And
Yeah.
you've got to pay them to do it, right?
Yeah. Mm-hmm.
So this is the world's first content management system for structured disclosure. It's so easy that anyone can do it.
Yeah, it's seamless, and like you said, anyone could walk in and be able to produce these professional financial reports, which before, there's this extreme asymmetry of knowledge. So I think it's going to help to increase compliance across all of these companies, and also probably help reduce their audit costs and costs that they're paying to CPA firms as well. So it's going to just be an improvement all around for companies and the end readers of financial statements, because they're going to be getting accurate, standardized financial statements as well.
Right. That's right.
So so I really think this was a very interesting discussion, and what you're doing with this Pacioli protocol over at Audit Chain is going to be extremely valuable for businesses, for CPA firms, for anybody that basically has to comply with these regulatory frameworks. So Jason, for everyone that's watching here, what would be the best way for them to get in contact with both you, if they want to speak with you individually, because you obviously have a wealth of knowledge, or if they want to get in contact with your company and possibly, demo this protocol and platform? What's the best way for them to contact you?
Well, you can go to our website, pacioli.ai. You can send a contact form through there. Our social media, Twitter, Facebook, Instagram, TikTok. You can get in touch with us that way. You can send me an email, right? I've never given out my email on air before, but
maybe LinkedIn too.
So, yeah, LinkedIn, I'm there all the time, right?
I know we message a lot on there, so that could be a good place as well.
So, yeah.
So I encourage everyone to reach out to Jason. These regulatory frameworks are going to continue to get more complex, and they're going to be across many more jurisdictions in the future. So this is going to be imperative for, any Web3 CEO, CFO, anyone that's going to have to get into compliance. So I encourage you to reach out to Jason and his team. And to everybody watching, I hope you gained some value from today's episode. Until next time, I'm Patrick Camuso, signing off. Jason, thanks again for coming on the Financial Frontier. Until next time.